A year ago, Micron was a commodity nobody wanted, a boring boom and bust memory chip maker. The market had ignored it for decades. Then something cracked the whole story wide open. AI made one of Micron's products, a specialized memory chip called HBM, irreplaceable. The stock went from around $103 to over $1,100. That's roughly an 830% in a year. Then joining the $1 trillion club. So today's question is this. IREN, the Bitcoin miner pivoting to AI, is trying to run the exact same playbook. And the mechanism it's using is one of the most powerful and most misunderstood forces in all of investing. Here's where I land right up front. The Micron comparison is the most useful lens for understanding IREN right now. Not because they're the same, but because the places they differ are exactly where the risk lives. Here's what you'll know by the end of this video. Number one, what a re-rating actually is and why it can multiply a stock without earnings even changing. We're also going to be looking at why IREN and Micron are making the same kind of bet just on different scarce input. And lastly, the honest differences that make IREN the weaker, earlier, riskier hand in comparison. So stick around for all three so you can make the best decision going forward for your exposure.
Welcome to the game, it's the Instant Stocks by Mikhail Kuhar.
And if you're new to this channel or you've been here a little while, my name is Mikhail. One of my highest values in life is freedom. It's why I've partnered with X10. And over the last 4.5 years, we have built an AutoPilot software, which essentially is 100% hands-off for you to trade. It allows our team of traders to send a signal through our software directly to your Interactive Brokers account. One of the best things is you never have to send us any of the money, and we just launched V3. What exactly is V3? V3 is the combination of AI and our trade history, millions and millions of data points of potential trades, trades we've taken, winners we've cut, losers we've cut, stop losses we've implemented, and trimming winners as they go. And it's given us an edge on top of what we've already done. And the reason we've done this is I'm a big believer that you cannot have true freedom in life unless you have time and money. If you have money, you don't have time, you don't have freedom. If you have time, you don't have money, you don't have freedom. And I understand everyone watching this, 90% of the guys I speak to that come through on here do not trade full time. You have a job, you have a business, you have a family, you have responsibilities, and with those responsibilities takes capacity. You can't be staring at a screen all day, reading every single article, analyzing every single chart that comes out. And sometimes a lot of us just don't want to do that. I know I don't want to spend my life in front of a screen. So I let the pros do the work for me. I'm 80% in long-term conviction trades. One of those big ones is HIMS. That's one of my big positions, and 20% in short-term trades. And we aim every single month to get anywhere from 8 to 15% and even more return for our clients through our software. And no matter the size of your portfolio, as long as you have 10,000 US to allocate inside of your portfolio to make sure you have enough to catch the trades, because we have a 5% stake per trade as purely risk management on the inside, all the way up till we got clients with $500,000, $600,000, $700,000 in their accounts. And you can also see here, these are the results from some of our clients in May and the last few weeks. Some of our picks have allowed clients to buy houses, return thousands and thousands of dollars every single week, and some of them just to supplement an income to cover their rent or any other expenses, or to double down and increase their portfolio so they can compound the results quicker. So if you want to find out more, click the link below. And if you're unsure and you still don't know what we do, book a call and I'll walk you through every single thing we do on the back end so you can make the best decision moving forward with what you want to do. Without further ado, let's get stuck into today's video. So let's start with the mechanism, because this is the concept that unlocks the whole video. Here's how a stock is priced. Take the company's earnings, the profit it keeps after all the bills, then multiply by a number the market is willing to pay for each dollar of those earnings. That multiplier is called a multiple. And here's the crucial thing. That multiple is not fixed. It changes based on what kind of company the market thinks it is. A cyclical commodity business, one whose profits crash every few years when supply floods the market, gets a low multiple. The market doesn't trust the profits to last, so it doesn't pay much for them. A secular growth company, one with durable rising demand that doesn't depend on the economic cycle, gets a high multiple. The market believes the earnings will keep growing, so it pays a lot for them. The same dollar of earnings will get a completely different value based on which category the market puts you in. A re-rating is when the market changes the category, and that is where the money starts to explode. So if we look at this, before the shock, hated cyclical commodity cheap multiple. The shock, AI rewrites demand for one specific scarce thing the company makes. The proof, the demand is real. Sold out capacity, multi-year contracts. Then the re-rate. The market swaps the cheap multiple for a rich one. The result, the stock multipliers. Not just because earnings went up, but because the market changed its mind about what kind of company it is. Micron ran this exact playbook for most of its history, a boom-bust memory chip maker. So when the market looked at Micron during this time with a low, the skeptical multiplier got applied. Then AI changed the whole demand picture. A special kind of memory called high bandwidth memory, or HBM, became essential for AI chips. Supply got tight. Micron's HBM capacity sold out under multi-year contracts. Suddenly, Micron wasn't a boom-bust commodity vendor. It was a critical sold-out supplier to a structural AI boom. The market recategorized it from cyclical commodity low multiple to AI era scarce input winner high, and that gives it a high multiple. Like a lot of things we've been seeing in the AI space are just getting higher multiples. And the stock went from roughly $103 to $1,100. One analysis put it perfectly. Every percentage point of HBM in Micron's product mix lifts its blended profit margin. That margin transformation was the real engine behind the re-rating. The commodity got relabeled as a secular AI winner. The multiple expanded violently. The stock multiplied. That is the re-rating playbook. Now, why the Micron comparison is serious, not just hype, both IREN and Micron are fundamentally selling the same type of thing. The scarce input that bottlenecks the entire AI boom, they just sell a different one. For Micron, it's memory bandwidth, the HBM memory that AI chips desperately need. Tight supply, sold out, structurally in demand as every AI system needs more. For IREN, it's power and compute, the electricity and data center capacity to actually run AI. Also desperately scarce, also structurally in demand as the AI build-out accelerates. Both are the picks and shovel suppliers in the gold rush, selling the bottleneck resource that the AI gold rush cannot proceed without. So if we look at the numbers side by side, the S&P 500 is up about 15% over the past year. IREN is up roughly 500%. Micron is up roughly 830%. Now, Micron re-rated from around $103 to $1,100 as AI made HBM memory a scarce input. IREN is attempting the same shape. Earlier in the process with a smaller earlier run. Now, the structural parallel inside of this is both started as lower quality commodity businesses. Micron, a cyclical memory maker. IREN, a volatile Bitcoin miner. Both got a low skeptical multiple from a market that saw them as boom-bust operations. Then AI created explosive structural demand for the scarce input each company controls. Memory bandwidth for Micron, power and compute for IREN. And in both cases, the bull thesis is identical in shape. The market recategorizes the company from cheap commodity to essential AI infrastructure supplier. And as that re-rating fires, the multiple expands and the stock multiplies. IREN's roughly 500% run over the past year is arguably the early innings of exactly this re-rating. The market beginning to swap IREN's Bitcoin miner multiple for an AI infrastructure multiple is the important part, just as it swapped Micron's commodity memory multiple to an AI memory multiple. As we tracked in our first Micron comparison episode, you can see that in my past videos. The stock mechanics can be violent and fast. Now we're digging into the deeper why. Power is genuinely one of the hardest things to acquire in AI. It takes years to secure grid connections and energize data centers. That scarcity gives IREN pricing power. It gives it the same logic that gave Micron its leverage when HBM became impossible to find. So the bull case foundation is real. It's the same type of bet. It's the same scarce AI input. Hated commodity origin re-rating mechanism is right ahead of it right now. Now, where IREN just isn't Micron, because we need to be an objective adult in this. We can't just put our rose-colored glasses on and just chase rainbows and green candles only. Because the re-rating parallel is real, but the differences are where your money is actually at risk. And those differences are devastating to any naive next Micron thesis. The first difference is Micron was wildly profitable through its re-rating. When Micron re-rated, it was selling a real sold-out product. It's guiding to record revenue around $33.5 billion for this quarter, with real earnings flowing right now. Its Q3 earnings report is coming June 24th, in just a day from now. Now, the market was re-rating a company that was demonstrably earning enormous money. IREN's Q3 revenue filed May 7th came in at $144.8 million. That missed analyst estimates of roughly $220 million by 34%. AI cloud revenue specifically, $33.6 million. Not $33.6 billion, $33.6 million. The billions is contracted revenue. The $3.5 billion NVIDIA deal, the $9.7 billion Microsoft contract, those don't start commissioning until GPUs are delivered and in service. The revenue on those deals is contracted, not flowing. Micron's re-rating stood on a mountain of real current profit. IREN's re-rating stands on a promise of future profit. That is a massive difference. The other part of this is Micron's scarce input was a real sold out industrial product. HBM memory is a tangible thing that AI chips physically require. You can see the demand in sold out order books and multi-year contracts that are generating revenue. IREN's legacy commodity, Bitcoin, is speculative. Volatile crypto prices fell this past quarter. That's part of why total revenue dropped from $184.7 million in Q2 to $144.8 million in Q3. The scarce input IREN is pivoting to, power and compute, is real and valuable, but the legacy business it's transitioning from is far shakier than Micron's was. Also, power energizes slower than chips ship. When Micron's HBM demand exploded, they could ramp production and ship chips relatively quickly. IREN scarce input takes years to build out and energize. You can't flip a switch for 480 megawatts. Sweetwater 1 got energized April 23rd. That's great news, but turning power infrastructure into operating revenue generating capacity is inherently slower and more capital intensive than shipping chips, which means IREN's re-rating has to sustain on faith for much longer before those profits are. Now, a full re-rating tends to move through 5 stages. Stage 1, the before, hated commodity, cheap multiple, ignored by the market. Stage 2 would move on to the shock. A structural demand shift hits the company's scarce input. Stage 3, the proof. Evidence emerges that the demand is real, sold out capacity and signed contracts, exploding margins. Stage 4, you start to get a re-rate. The market swaps the cheap multiple for a rich one and the stock multiplies. Then you have the result or the outcome. The company is now valued as a secular AI winner, re-rating complete and more durable than. Micron walked through all 5. It earned each stage with real flowing proof before the stock moved to match. Now, where is IREN? IREN has clearly moved through stage 1. It was a hated cheap Bitcoin miner. Stage 2 is done. The AI demand shock hit its scarce input, but IREN is now in the middle of stages 3 and 4 at the same time. It's showing some proof, signed contracts, secured power, the NVIDIA deal, the Microsoft contract, that's stage 3 evidence. And the market is already re-rating at the 500% run, that's stage 4, happening before the proof is complete. IREN's stage 4 re-rate is running ahead of its stage 3 proof. The market is paying the rich multiple before the scarce input has been fully monetized into flowing profit. Micron had largely completed its proof stage before and during its re-rate. So Micron stage 4 re-rating was anchored to completed stage 3 proof. IREN re-rating is on incomplete proof. That in itself, it's just a riskier sequence. So the big question at the end of this, is IREN the next Micron? My honest verdict is the analogy holds at the level of mechanism. IREN really is running a Micron style re-rating playbook from a very much high level, hated commodity business sitting on a scarce AI input, right? Attracting a re-rating from a cheap multiple towards a rich AI infrastructure multiple. At that structural level, the comparison is very serious, but the analogy can start to break and crack at the level of proof. Micron's re-rating was earned. IREN's re-rating is so far borrowed, built on promised future revenue from a scarce input that's slow and very expensive to monetize, funded by debt and dilution, and also with a speculative crypto legacy. IREN is the next Micron, only if it converts its promises into the kind of real flowing profits Micron already had. And the way you watch that conversion is one number, AI cloud revenue, ramping from 33.6 million actual towards 3.7 billion contracted. If that ramp arrives on schedule, the rewriting will be earned. If it keeps slipping, IREN has been granted credit in advance for proof it hasn't supplied yet. It is a very similar playbook. I think it's a slightly more risky bet on IREN considering what Micron done for its re-rating, but you need to watch the delay and the completion on everything they've committed to on their execution going forward. As always, no financial advice. Do your own research. I'm not your financial advisor, but I appreciate you hanging around for the end. And as always, if you want to keep up to date with everything happening in the space of IREN and my other channels where I'm covering deeply other stocks as well, give it a subscribe, give it a like, drop a comment below, and I'll see you in a video tomorrow.